it's Quinn here from Lendy, and in today's video, we have Sarah Moore, Lendy's home loan specialist, to give us an understanding of what LMI or lender's mortgage insurance is, how it's calculated, and what you can do to avoid paying it. Welcome, Sarah, back to our channel.
Thank you. Thanks for having me.
No worries at all. All right, Sarah, let's dive right into it. Sarah, can you first begin by explaining to us what lender's mortgage insurance or LMI is?
Yeah, sure. So, lender's mortgage insurance is essentially an insurance policy that some homeowners or people that are looking to refinance may need to pay depending on the loan to value ratio of the property. So, the purpose of LMI is to protect the lender from financial loss if the borrower is unable to meet their home loan repayments. So, like I said, it's linked to the loan to value ratio, and it's typically required by a lender if the borrower is considered a higher risk. So that means that, if the LVR is above 80% or you've got, less than a 20% deposit plus the costs.
Great. So when is lender's mortgage insurance or LMI required to be paid, and when is it paid during the home loan process?
So if the deposit is less than 20% of the value of the property, or if your loan to value ratio is more than 80%, that's when LMI will be applicable. So it can typically be paid up front at loan settlement, or the more common way that it is applied is it's capitalised into the loan and it will be paid out over the life of the loan. So LMI premiums are typically non-refundable. So if you switch your loan to another lender, if you were to refinance, then generally you won't be able to transfer the LMI with it.
Oh, I see. And now that we've got a pretty good understanding of what LMI is, can you please explain to us, Sarah, how lender mortgage insurance is calculated by the lenders?
So LMI fees will vary from lender to lender, and how much LMI you'll be required to pay will depend on a number of factors. And those are, the size of your loan, your deposit amount. So those with a 5% deposit are more likely to pay more LMI than someone with a 15% deposit, for example. Whether the property is an investment or if you plan to live in the property. And employment stability also comes into it as well. So we're looking at things like, are you self-employed, full-time, part-time, casual, probation might even come into it too. So who the insurer is, so who is obviously coming up with the insurance policy can vary. And then LMI can range from a few thousand to tens of thousands depending on the size of the loan. So it's really best that you speak to a lender, a broker or a bank.
And before you go, do you have any tips for our viewers on how they can avoid paying LMI in general?
So there's a few things. Some might seem a little bit obvious, but if you're very close to that 20% mark, obviously plus the costs there as well, you might consider waiting and growing your deposit. So that might sound a bit obvious, but that can obviously help if you just need to wait a couple of more months. There's another one here where depending on a profession, some professions are considered a low risk, and lenders might consider doctors, engineers, or accountants, for example, a lower risk, and they may waive the LMI fee on that application. It is important, though, again, to double check that, because generally that's capped at a 90% LVR for those professions. And again, not every lender will offer that. So do your research. Shop around with different lenders. Some lenders will borrow or let applicants borrow up to about 85% of the property before charging LMI. It's rare, but they are out there. So, again, do some research. Financial gifts is another way as well. So you might have a family member that's willing to chip in and gift you some funds towards your deposit to increase that equity there. And then use a guarantor as well. So, if that's an option as well, it could be a parent or a very close family member who will use some of the equity in their home to put towards your deposit.
Fantastic. Thanks, Sarah. And you want to find out more information about the cost of buying a home, please check out our video here, where we'll explain it in further detail. Thanks, Sarah, for joining in on our channel today, and we'll see you there next time, guys.